Good morning, everyone, and welcome to GPA Trading Services live trading class on this Tuesday, June the 3rd, 2025. As you know, today is Tuesday, Gary's Market Forecast, or GMF. It's the heads up on what's going down in the markets. But first, we have very specific rules of engagement. Those include the following. Do not trade with money you cannot afford to lose. Always trade with protective stops. Make certain the 4-hour, the 1-hour, the 30 and the 15-minute time frames align prior to trading with the MPA PE5 version 5.0 software. Also adhere to very strict money management rules, which includes never risking more than 2% of your entire account balance on any one given trade. For options friends, never risk more than 5% of your entire account balance on any one given options trade. And finally, all information provided by GPA Trading Services is for your educational purposes. So please give us a moment as we open up the charts. All right, ladies and gentlemen, picking up with the dollar index on the monthly chart. High level overview. Wave 1 is done. We're working on grinding lower in wave 2. Only question is, where does wave 2 complete? Are we going to come down a deep retracement around a 78.6%, right around that 80 is kind of what we've been thinking for some time now. That comes from back in 2007. We bottomed at a price of 70.53. 15 years later, we grinded up to this destination 1. We had talked about this years in advance, going up to somewhere around 115 to maybe 120. And sure enough, we went to 114.72. And now we're expecting some sort of retracement, which obviously since 2022 here, we've been spot on so far. The question is, and still remains, do we get this deeper retracement or do we just come a bit lower? The plan is obviously for the dollar to go breaking out to new highs in the long term. But again, this could still take us a few more years before we get down here. Back in 2022, when I talked about this reversal, I said it would take multiple, not just 1 or 2 years, but multiple years for this correction to play out. As this one from this low to high took 15, this could take 5 or so. Maybe a portion of that. I don't think it's going to take 15 years, of course, but we've already been in it about 3, and it looks like we still got a ways to go. Going to the charting platform, we're at a very critical level that you can see we're testing now. From the prior low to the high, that represents a 38.2% retracement level. But from the COVID low here, up to the high, that's a 618 retracement. So it's critical level that sets the tone. If we could start breaking below this level, then based on our strategy, going over to the charting platform, we can see from that COVID low, which is off the chart over here, got to compress this down, but over here where that COVID low was, up to the high, we're testing that 618 level. So this is extremely important, Randy, James, Ian, Mr. Tucson, that we actually break below this, because what happens when we do? What sets the tone once we start taking out that 786 level, well, the 618 to start, we got about a 75% chance we're going to go visit 85. And a 70+% chance we're going to go visit 82. That's huge. Right? All we got to do is start closing, not a wick down up in this area, but a candle body close below. Then the percentages state that we have a 75% we're going to come down to 85, and a 70+% chance we're going to come to 82. And that is right in the wheelhouse of where we've been anticipating this correction to go to. Somewhere around that 80 level. Amen? So using our arrows, this is extremely important level. That was a crooked arrow there. Let me try that again. This 786 level, right? 618 to 786. So this 98 down to about 94.5 is a critical level. The rule states that if you can break into the 618, in this case, break below it, at that point, we have a 75% chance we're going to go visiting 85 and a 70+% chance we're going to go visiting 82. And that's, like I'm saying, in tune with what we expect. So this is critical. So what happens? Well, if we hold the 618 and this ends up being just this corrective action and it's already over, then the dollar could obviously go breaking out to all-time, not all-time highs, but new highs, pushing into the 120s, 130s, etc. Or remember, we're not expecting the dollar to go breaking to new lows. We always have been talking about this, just getting a wave 2 retracement somewhere before we then go breaking out in the long term. So like I'm saying, bias is, yes, we're going to go lower. How much lower? Well, when I talked about this target, I was highly confident we would get somewhere around 115, 120. We got there, 114.72. Well, Randy, I'm just as confident we're going to come down and make a deeper retracement. And I don't think the 38.2% retracement is it. I think we are going to go deeper. Only question is, do we get down here? Well, this is why this level is critical. Well, once we break the 38.2 on this level, we should start moving toward that 50% retrace around 92. We break that, we should go in toward that 618, which is around this 87 level. Well, if you use the swing point low here from COVID low to the high, that's that 618 retracement like we showed you on the charting platform. And that sets the tone for us to go to 85 and 82. Well, that's extremely high probability outcomes. 75% chance is 3 out of 4. That's not too shabby. So this is why I'm watching to see how we break down. And then once we take out 98 in this 94 area, then it reinforces the idea that we're definitely coming down here. And strongly that we're even going to push toward 82. And that's the target. So will this play out destination 2 like we anticipated years ago? We shall see, but I still feel confident that's where we're headed. Now, another area of interest is not only holding the 618, but you hear a lot of people talking about the dollar is going to just go down into dust. Well, when everybody in the sentiment is that the dollar is just going to keep catering and going down, cratering and going lower and lower, then that's when the markets typically do something different. Well, it wouldn't shock me. I don't think we need to say, well, the more people think the dollar is going to get weaker and weaker and weaker and potentially replace it with the Chinese or Japanese and other currencies and lose its world currency, I don't see it happening. It's possible. Anything's possible. But even when all this was put out into measure and how much they want to push this lower, I still see the technical picture going back up. And that's why we always been talking about this again in a simple wave 2 correction. What's after wave 2? We go up in 3. And then we should go to make to new highs. Yeah, that's the plan. So in closing, I still think we got a lot more downside. I still think we have years of pressure coming lower. And I still think this picture is ultimately playing out. And like we always talk about, let's force price to prove its intentions. Are we going to break out and start making new highs now? And this ends up being the wave 2, one, just a little quick correction. And that's a 1 ABC2, and we're done already, and this is complete. Or do we continue lower? I say we're going to continue lower, and it's still going to take years to play out. All right? So up until price proves otherwise, no reason to believe we're ready to go breaking out now. But I would be remiss if I didn't talk about why this level and how we touched it, and we're just kind of holding above it at the moment. that it's important we take that out to set the tone for us to go much lower. And again, this area between that 618 and 786, this 98.67, 94.49, this zone is going to be extremely strong support. It took us a lot to break through it, and it's going to take a lot once we do. And then, of course, the good news is once we break through, it will turn to resistance. And then as we maybe come down and try to break back above, it should hold as resistance. So it's typically a battle zone. Former support, turn resistance, turn support, turn resistance, turn support. And you can see when we came down in here, it kind of held as support initially, then it went to resistance, then it went back to support. So even as we went ripping up to that 114.72 area, and then we're correcting. So again, once we start closing below 98.67, it starts to paint the picture. We're going to 85 and continuation potentially down to 82. And then certainly once we continue to break below this 94.5 area, then it really reinforces we're going to see 85 minimum, likely going to go to 82. And this is kind of why I've been saying somewhere between 82.78. Maybe we get a little extension beyond that where we push into the zone. So we shall see how that plays out. Why is it so important when you know where the dollar's going? Because when you know where the dollar's going, you know where a lot of other asset classes are going, including but not limited to the euro dollar. So is this continuation after this correction over and we're ready to go breaking out? Or are we going to get another push lower? This is why this zone, we're stuck between support and resistance. Just like the dollar, we're stuck between support and resistance. We're pushing the lower limits of our support zone. So this still is that zone we've tested before, tested, bounced, tested. So this is still a support zone. We're stuck, and we have resistance up here. So I'm not saying it's out of the question, Randy, that we have to go breaking down right now. We could get a bounce, and we could rally up toward the Magic Fibo up here. But based on the recent low to high, we did start closing below that 786,618. So we at least have a higher indication we should go a little bit lower toward that 98.40, 98.19. However, we've already made a new low. So this still could be the low, the higher low. So, I mean, this is just technical picture. You got to look at some of the opportunities and what's setting a pace. But right now, we continue to hold this higher low and we go breaking above this resistance zone, then no question, I think we're going to go up and visit the Magic Fibo. So this portion would be extremely high probability. If this bounce holds and we go breaking this pink box, no question we're going to go up and visit this Magic Fibo line. Done deal. Well, if we continue to break below this swing point, which we've tested a few times, test, and it's within the same little zone of the prior low, just a few ticks lower, that if we go breaking back below that, then I think it's game on. Not only are we going to reach this 98, 94, 94, 19 area, but I think we're going to move onward downward to this 97/96 zone. See it? So from the prior low to the high, we start breaking this zone we're still kind of holding in. That sets the tone, the 97, 96 area. Amen? So I'm leaning more toward lower low, although on this latest move, we just missed that 1448 target. We did make a new low here, but we're still at a higher low from this swing point. And we're also stuck within that little 618, 786 zone. You can see we're in. So if we start closing below this, we wick below here and we didn't close. And then this one where today's candle, we're back in it. So if we can start closing below this level, this 99-ish level, basically coming back to this 98 targets down here, then it sets the tone for further downside. So just like we said, we go breaking above the pink box, we have extremely high probability we're going to go visiting the Magic Fibo. Well, we start closing below the green box, not just a wick below, but an actual candle body, then it sets the tone. We're going down to 97, 75% chance, 70+% chance we're going to 96. And as we start to achieve this 96, 97 area, and potentially even pushing lower toward the 95, then it solidifies our bigger picture of closing below the 786618 and opening the door toward our 8582. So this is how I do it. This technical analysis, God-given talent to read and interpret price on a chart, and the bias is until price proves otherwise. Yes, I say be careful at the moment. We're stuck between that resistance and support zone. But if we can start closing below this level, it sets the tone. 75% focus, we're coming down here. That is big. We then continue to reach these targets we just discussed. Then it really sets the tone. Hey, we're at 75% chance we're going to go there. We break below this 94 level, this big pink box. Then it reinforces we're coming down here, which sets the tone. We're definitely going to make a new swing point low below this. And then your targets would be in this area, 85, 82. Amen? Well, what if that happens? Well, the euro dollar is going to go breaking out. That's what it does. It's inverse relationship. So several weeks back, we talked about this bottom reversal, and we looked at the same structure. From the prior high to the low, we said once we started closing above this 108 area, we'd go to 113, 114.95. Highest of highest probability. Remember that? When we started closing above this 618 level, which was this candle over here, we said we have a 75% chance we're going to go visit that target, 70+% chance we're going to go visit that target. And I talked about this weeks and weeks and even months in advance. And I even went on to say when this swing point low, after this little rally and a higher low, based on the software was setting up, we had a weekly reversal, monthly oversold, starting to reverse. All this was kind of giving us the insight that it was time for this to go bouncing. And that weekly reversal said that we were likely going to go. And I called this swing point low. And I said, start targeting the Magic Fibo. Once we get there, and then we break above 108, we'd go here like clockwork. That's the technical picture. So is this correction over and we're due for one more surge? Or is this the bigger little A, B, and we get a C down to then set the tone for the breakout? But either way, I suspect we're going to go breaking out. So high probability trade, ladies and gentlemen. We start closing above this 114.70 area, candle body above it. Then it sets the tone. We go on to 116.50, 70 plus, we're going to go to 117. And en route to our next target up here at 118.50 area. So we reach the first one, we reach this target and that target. Next one up is this 1850, but we could, as we expected, some sort of correction. Is this correction over here and we're ready to go breaking out? Or is this part of an A, B, C? Then we go breaking out. All I can say is if we get the price to come down toward this Magic Fibo on a daily chart, this orangey line, ribbon, if you will, that would be an extremely high probability for me to buy and go long and shoot for these targets once again, and then onward and upwards toward the next one. Well, on this smaller scale, from that high to this low, we need to break above, and then we'd set the tone for the next time, like we did over here, that high to that low. When we broke the 618, set the tone you were going at 1448. Well, we can rinse and repeat that again. So if we continue to break the box now, there's your target. If we don't, and we ultimately get this as an potentially shooting into this A, and this little corrective action is B, and we do come back down in C, this would be my salivate country area to then buy and go long again for us to go back and shoot for these targets, and then continuation up to the 1800 area, 118.50. All right, so be careful. Price has to prove it. So bottom line is we close above this 114.70 area, then it says we're going about 200 pips to make a move toward that 116.50, 117.16 area. If not, we start coming back down and we don't hold this little green box, we start closing below this green box, then highest probability we're going to make a move toward the Magic Fibo. And I would expect if that happens, that's a great opportunity to go back long like this was to go long. Amen? All right. What about the pound dollar? Same thing. We haven't reached its respective targets. Go back weeks and weeks and weeks ago when we talked about this bottom reversal. I said it's time to go long the euro dollar, long the pound dollar, because we were going to make a big run up. And then when we had the prior high to low, we started taking out this 129 area. I said, go long there, you're going to make a nice run toward that 136. We're just shy of the target, Randy. We didn't quite reach it yet. So that's the bigger the move down, even if we don't get there and maybe we pop and get there, then we get the correction, or this is that little A, B, C, and we come further down, all that means is I'm buying it again, the continuation up to 136, 138. Eventually we should break out towards 142. Yeah, that's the plan. But is this little correction over and we're going to reach this target first, then we get the bigger correction, or is that correction already underway? I'm more leaning toward we're going to continuation of this than a big pullback, but all I can say is if we get that bigger pullback now and we don't hold this little green box, then we're likely going to come toward the Magic Fibo right there. And if we get that far down, that is salivate country yet again to buy this zone and shoot for that target. But more than likely, this will continue because we're only a handful of ticks away from that area for us to get up to these targets. So I wouldn't be surprised to see that pop and then the dollar index drop down toward these extensions. Amen? So it fits hand in hand. The dollar goes dropping, the euro dollar and pound dollar are going to go popping. Amen? And that's why we're watching it. So it could definitely hold here, go popping up. Then that pound dollar would pull back further to the salivate country. Or we get this to go popping, that euro dollar could pull back to its respective Magic Fibo line, which would be down here. Well, what if we hold resistance and then we don't hold support and we come down to this area? Buy. Go back to 113.60, 114.95, onward and upwards to 118.50. But I believe we're in the midst of this onward chopping, grinding, stair-stepping affair to go much higher. And remember, if our target plays out, bottom line, dollar index goes to 80 or lower, then the euro dollar is going up here to 140, 145 area. That's still thousands of pips away for us to get there. And if the dollar ends up coming down to this 80 area, then the pound dollar, no ifs, buts, or ands, is going to go up here toward that 160, 170, kind of fine-tune about 160, 165 area. No question. So what can happen? Well, eventually, we were never expecting the pound dollar to go breaking out to all-time highs. We're looking for a retracement, then another push lower Same thing with the euro dollar. Well, we're never expecting the euro to go breaking out to all-time highs. We're looking to get a lower high, then another push lower in the long term. Well, on Tuesdays, we talk about Elliott wave and our wave count. All we're trying to accomplish is this A going up in B, up toward that 140, 145 area, to then come back down in what? What's after A, B? C. So I suspect we're more than likely going to come back down and make a new low below this 0.95. Well, we could still be a few years out before we get up here. And then what if it's 26, 27, 28 by the time we're up here? We might not see this price coming back down below parity and below this swing point low until the 2030s. So that's what takes time, but this is high probability outcome. And I do believe this 1-2 is complete and we're just stair-stepping our way toward that B. Then we're going to come back down and C. So that's the big picture. Short term, could we get another correction? The dollar goes popping, this thing will correct in the inverse relationship. But we still believe highest probability we're going up here. All right? So be careful. Stuck between support and resistance. Dollar index, stuck between support and resistance. Right? Even though we push the limits of this, it's still this green box, which is support. And if this goes popping, we could take out the pink box, then we're definitely going to come up here. And if that happens, the euro is going to take out its support zone and move down toward its magic Fibo. And the software is right there with us. Coming over here for the dollar index. We're pushing lower on the daily. We might get this to push, or we're going to end up slingshotting lower and continue this move lower as the weekly is still in oversold territory. So you could see how potentially we could get that bounce. Well, one thing we have with this software is we call this engage, disengage, slingshot phenomenon. Well, Randy, on the software, if we can get red to turn up, blue and green right there, the PAI to turn up, then this is what we have is obviously a higher low. And if we disengage, then we're going to go back to that high and make a new high, right? If we get this to disengage, price will go back to this high and make a new high via this engage, disengage. Well, that could happen. Right? We're looking at it. That certainly could happen. And what would that look like? That would look like us breaking the resistance level and going up to visit the magic Fibo up here. So think about it. If this is the low, that's the high, and this is the higher low, what if that weekly disengages? That means this daily is going to cycle up, daily is going to cycle up, this is going to go pushing up and push toward that magic Fibo. So there's signs and symptoms all over the place. Well, I don't need signs and symptoms. If I can see this break this resistance level, it's over, it's going up here. Or we close below this support zone, we're going lower. Got it? All righty. What about, again, pound dollar? Same thing. I do think we're going to go higher than lower. Even if we get a deeper correction, that's fine. I'm still looking for this to go onward and upward to reach these targets, which we came close. But we haven't reached it yet. And then longer term, I think we're going to go up to 142. And remember, the target way up here is up at that 160-ish, 160, maybe 165 area. So we still have thousands of pips to go. And that's that dollar breaking down further. Dollar yen, it's kind of like the rest, stuck between support and resistance. If we can start closing below this green box, not just kind of wick down here and touch it, bounce, wick down here and touch it, but if we can start to get a candle body close below this, then by all means, we'll be targeting 138.60, 137.50, onward and downward toward 134. And this was the original target, which we discussed weeks back. that we were likely coming back toward this 136, 134 area. And that was from the prior low up to the high. We broke below this 618 level, which was the 146 area. And I said, when that happens, you have a 75% chance you go and visit this 137, 136.80 area. Well, 700 of that 1,000 pips we reached. Now, since then, we bounced and we've been chopping, overlapping. This chopping, overlapping doesn't look like this is ready to go breaking out. It looks like it's getting ready to make another thrust lower to achieve these targets. So we still have a 75% chance we're coming down here. Then this reversing and go breaking out. Well, in order for the dollar yen to change its tune, we got the lower high trending line that's way up here. We have the Magic Fibo, and we have a current lower trending high line right there, lower high trending line, two of them, but the most severe one is this one. So we have to break above this resistance level, which is that trending line. Then you got to get to the Magic Fibo, and then you could potentially talk about, well, that might open the door for us to test this, and we're still at a lower high. So I don't see this breaking out right now. I really don't. I see this breaking lower, and we have a higher percentage, 75% we're going down, then we're going to go breaking out. But again, caution is warranted because we're stuck between support and resistance. We have support, we have resistance, and there's a lot more resistance for this thing to go breaking out than the support we have for us to go breaking lower. And we've already done what we asked it to do. 700 of those 1,000 pips has already been reached. Now we just got to go the last little portion here. So be careful. I do think we're going to continue with lower highs, lower lows, and we're ultimately going to push lower. As our dollar pushes lower, the dollar yen will push lower. All right. Pound yen. Pound yen got a nice bounce today. The dollar bounced. So the pound yen got a nice little bounce. Good thing you took some profits off of that. Look at that, went down pretty substantially from 195 down to 192. Good 300-point reversal and a big intraday wick here. Well, is this going to go breaking out? It's possible. Remember, if our markets go into that blow off top, then I could potentially see the pound yen making a run. But I think we're also looming for this to make a bigger correction. So Randy, in my humble opinion, I can't tell you what to do because it's not my job. No buy, sell, or hold recommendation. But based on the technical picture and the idea that the markets are going to give us a much bigger correction sooner than later, but no later than later, then I expect this to come down more than I expect this to go breaking out. So any big run on this, I'm going to look to sell it back down, as opposed to start a move here and look for this thing to go breaking out by thousands and thousands of pips to the upside. I think it's a bigger correction, and we still need some more downside. If you look at that bigger picture, all of this is overlapping chopping, so we need another push lower. And we might get a substantial push lower. Then we could talk about, when Elizabeth, I'm coming to join you, honey, and the markets go crashing, which is still anticipated sometime late fall, maybe early next year for that correction. This thing should strengthen dramatically. That's kind of run to risk aversion. When the markets are crashing, typically people go to the yen for some safe haven. So we should see this pound yen, just like the dollar yen, have a substantial move lower. And even short term, I think our markets will give us a correction before then breaking out to all-time highs. Before then, the Elizabeth, I'm coming to join you, honey, here comes the big one. That's really going to set the tone for this thing to go down shortly, then go up, and then the big crash comes and this thing goes down sharply. So we're looking for a big retracement off of this big run up. And you'll remember when I talked about the pound yen years ago, I said the pound yen was going to go on like a 10,000 point run. It was going to go above 200. And we would way down here. Way down here. I got to go out to the weekly, even the monthly chart, and expand this view. But you can go back in the archive. When we were way down here in the 120s, I said we're going to make a move roughly about 10,000 pips and make a move to go back toward this high and make a new high. It's in the archives. And I didn't say it after it got there. I said it when it was chopping down here. We got a low, we got a high, we got the higher low, and then we double bottom down here. So back during 2020 area, I talked about this thing running up toward this high, making a new high into the 200s. Bingo. Now what? Well, we could get a substantial retracement back down from this prior low to high. We're looking at the 618 to be around 150. 786 around that 142 area. So this green box, this is likely where we're ultimately headed when the market starts doing its thing late fall, early next year-ish. When Elizabeth, I'm coming to join you, honey. I'm looking for this thing to give us a big correction back into this zone. And then we can talk about, was the market's bottoming? Are we looking for a continuation? Or do we make another higher low? We got lows, higher lows. And you say, well, this was a double bottom basically, but it's still somewhat of a higher low scenario. High, higher low, another higher low over here to another higher high. That's the plan. Definitely. That would be the plan, but we shall see. So in closing, short term, be careful. Go back to the daily. We got a big bounce today because the dollar bounced. I'm not convinced the dollar is ready to go breaking out. And even if this thing rallies significantly more, I'm not looking to establish long-term long positions. I'm looking to establish, the higher this thing goes, another push lower for what's ultimately headed our direction. All right. All right. Let's continue. What about the markets? We got some divergence between SPX. You can see SPX from the high to the low. We got lower highs on this latest move. Even after that pullback and bounce, we're still at a lower high over here. We're trying to get it there. But on the future side of it, we actually made a higher high. Right? From that high to this low, we actually made a higher high in the futures, where the spot, we have not. So typically the SPX does not diverge before you see the bigger move. So what I believe is playing out here is part of a wave B correction. And this could go on and even make a new high to match what ES did. Then we get that bigger correction. Amen? So I think that's part of an A. This is the B, and it might be obviously expanded flat, which could give us even a slight higher high. But then I'm looking for the bigger move down. We've been looking for this 5,400 down about 5,000 range, kind of fine tuning somewhere around that 5,250, 5,300 zone. I still think we're headed there. So be careful on this. I don't think that this is, Elizabeth, I'm coming to join you, honey, as soon as we get that. I think this is part of that correction. Then we go into late fall, early, maybe end of the year. We get a blow off top. And then we get, Elizabeth, I'm coming to join you, honey, late year, maybe early next year. So be careful with this. I don't see this going up much higher. Even if we get a little bit of a pop, I still think we're going to get that correction back down. The technical picture looks like this is showing, this is an A. This corrective action is part of a B. And again, we could go up touch 6,000, 6,000 and change. We don't have to go up that high, but we can. And then we'll come back down in a C and set up that bigger correction down in this 50, well, let's say 55 to 53 area. I'm liking this 53 area. What does that come from? That comes from the bigger picture of the prior low to the current high. We get a correction into this area, which is the danger zone, as we like to call it, the 50%, 61, 78.6. So that's why I'm kind of fine tuning somewhere around that 5,300, 5,250 area. So is this going to go breaking out and we're going to all-time highs? It's possible, but very low probability. And this latest move looks like the beginning of an A, B, C, and we're likely coming down into this zone. And I look for this to take place probably through June, maybe into July. I'm not looking for this just to go plummeting in a day, plummeting in a week. I think we're going to talk weeks into summer. And then once we've finally finished that, we'll go from summer into fall, maybe late into the year-ish, early next year, and we do a blow-off top. So let's just track that. What does it mean? Well, if this plays out the way we expect during this corrective action, I expect to see the dollar yen, pound yen pull back when our markets start pulling back. Then, when this reverses and we do this blow-off top, I could see the dollar yen, pound yen potentially surging with risk on, risk off. When the markets are tumbling, the yen tends to strengthen. When the markets are ripping higher, the yen tends to get a little bit weaker. So that would allow those dollar yen, pound yen after the correction to then get a bit of a run. But then once we finish this Elizabeth, I'm coming to join you, honey, setting up, that's when we get the big down move on the dollar yen, pound yen. Got it? So this is not Elizabeth, I'm coming to join you, honey. I think we can get a blow off top. Then Elizabeth, I'm coming to join you, honey, visits. And that's when we see that dollar yen, pound yen go considerably lower. And I know we just kind of passed that, but I do want to call your attention to it because it is substantial. We can see, based on this overlapping chopping action, I think we're going lower, no question. This is a high probability target we're going to reach. Well, if you go to the bigger picture from that prior run up, remember, I was the one that a couple of years back, I said, as long as we hold above 127, we're definitely going to 160 and above. What did we do? Went right to those targets. And I told you that when it was down here, long before it crossed above my 618 up here, to then say, okay, once we cross 142, we got a 75% chance we're going to 155, 70 plus, we're going to 160. I called it here. And I said, as long as we hold above 127, no ifs, no buts, no ands, right, Mr. Tucson? I was like, man, this is a good opportunity to get long the dollar yen with the carry trade. You get your little Louisiana lagniappe, and we're going to go at least to 160 and above. Bingo. Now, you look at this correction, we have the high, the low, the lower high. That's setting up more downside. Well, the markets we just talked about, setting that up too, right? So, yes, we might get a little rally into this, but I do think we're going to reach these 36, 34 target. And then, highly probable, we're at least going to come back down to this 127 level. So when Elizabeth, I'm coming to join you, honey, comes out, and we get the big crash coming, I suspect some substantial reaction to that. And we're going to certainly see the yen strengthen during that period of the market down moves of thousands of points. And this guy is going to do the same and move down substantially. Short term, we might get the pop. If the dollar holds that support zone, breaks resistance, we're going to go up to that Magic Fibo. So we'd do the same on this scenario. If we get this to pop, this could be that A, B, and we go up in C, and we come up to visit the Magic Fibo, and then we start breaking back down. So I won't say that this is definitely going to crater now. I do think we're going to reach not only the 38.37, but this 36.34 target, but we could rally back up here before we do. Or we start closing below this, then it's game on, continuation down. Pay me now, pay me later, we're coming here. Got it? Even if we go breaking back up, we're coming here. If we go breaking out, we're coming here. Got it? So that's why I would salivate if this thing goes ripping higher and we start getting these areas, then this is still a viable target. We haven't quite reached it yet. Amen? All right. I think you get the point. Same thing with the pound yen. Just looking at the latest move versus what we've seen in the previous. I mean, this is why this is substantially lower, thousands of pips lower for us to come down and visit this box. I think it's extremely highly probable and highly possible, probable too, that we're going to come down and off that recent low to high, which was almost 10,000 pips, we're due for this retracement into this zone. Now, will we get here before we get Elizabeth, I'm coming to join you, honey? I don't think so. I don't think we're going to crater that many 1,000, 4,000, whatever pips to get in this area from where we currently are down to the 140s, 150s. Still would be in the neighborhood of 4,000 pips to get down here. I don't think we're going to get there until we start to see our blow off top in the markets. Then we start getting that Elizabeth, I'm coming to join you, honey. And that's when this baby's going to take it. Remember back in the 2000 financial crisis, what happened? Boom. Look, it just dropped. Risk aversion. And what happened in this section here? Part of that big correction, but markets took a little dip. Markets go rallying, it rallies with it, markets dip, financial crisis, boom. Go back to 2000, 97 going into 2000, same type of move. So that's why I think you get correlation when it's there, correlation when it's not. But I'm looking for further downside during that Elizabeth, I'm coming to join you, honey. And the technical picture is screaming for us to come back and do a retracement into the zone, longer term. So back to the question. This diversion has to play out, Mr. Tucson. It typically resolves itself before we get the next big move. In my humble opinion, the next big move is going to be to the downside. Right? So I'm not talking about a little pop going up a few more points here, maybe 100 points, something like that, and we get that little A, B, back down in C, but be extremely careful that this may grind up the next few days. Doesn't mean it has to happen today or tomorrow, but I think coming soon, this is going to fizzle out, and we're going to get that another big push lower. So I had been calling for this since the last several weeks, that from this low, we were going to get a correction, and ultimately we should come down somewhere in that 618-786 zone, this bigger green box, which is that 54 to 5,000 range, kind of fine-tuning around 53. Amen? Hovering near that 618. So in my humble opinion, be careful that I don't think this is ready to go breaking out and do the blow off top right now. I think we're going to get that correction into the next few weeks, followed by, then we go into late fall, maybe end of the year type of thing, where we go blow off top 64 to 6,600. All right. So this isn't out of the question just because we got this little retracement and the last little pop. Well, Randy, what is this? Is this a 1, 2, 3, 4, and this final last little pop is the 5? Then we start this correction? Or that already been in 1, 2, 3, 4, 5, and this is part of that A, B, C, and we get the correction. But either way, this could go popping to make a new high, then we get the bigger correction. It's coming. Then we go blow off top. What I don't want, obviously what I would not like to see, is this just keep grinding higher and higher and higher, and we make a new all-time high, because then that brings us back to what I showed you way back in the 2007 financial crisis. What happened? It looks eerily the same, so I'm not a big proponent of that. What happened over here? We had a nice big correction. Then we did a little grind higher, grind higher, grind higher, made a slight higher high by like 20 points. And then we got the big, Elizabeth, I'm coming to join you, honey, financial crisis. So if this were to go against what I think it's going to do, meaning we get a pullback first, then the blow off top in the late fall into the year, this baby keeps grinding to new highs. We probably won't get to the 65, 6,600 zone. We might go to 62, maybe 63, and then we get the Elizabeth, I'm coming to join you, honey, sooner. So if I zoom in on this just real briefly, this is exactly looking very eerily the same, and I showed you that the last several weeks, but it's always a good review. And we're looking primarily at this zone right here. And I'll zoom that up a little bit more and see more candle body in here. But that is critical. That I would rather see our correction come now to then do the blow off top, as opposed to this just reversal when we go breaking a slight higher high and then the big financial crisis set in, right? So this is critical. I want to see the correction early to get a blow off top, as opposed to we go breaking all-time highs. And notice this kind of chopping we did the last push, got the big correction, V-shaped recovery, then it went to, ouch, look out below. Well, this is a weekly chart. What happened on the 3-day chart? Right? Back then in 2007, of course, when you do that, you got to go back. Bear with me while I do this. I think it's important that we see that. But notice we touched the 3-day, right? We came down after a little chopping, did a quick all-time high, then we came down, got a nice correction, and then what happened? We did a V shape and we kept going, we kept going. We didn't get a pullback along that bounce. We just kind of went straight up, made a new high, then it was over. See this action right here, kind of chopping, new high, big retracement, V-shaped recovery. Then what happened? Boom. Well, right now, current price action is on a higher time frame, the weekly. This looks identical to what that looked like. So let me move this back over here, bring this into perspective. And what did we most recently see? Instead of the 3-day pullback, we got a weekly pullback, consolidation, pop to a new high. And look at that from that weekly versus this. We kind of just did the consolidation. We popped a new high, got a big retracement down, V-shaped recovery. See it? Well, this is worse. This is on a weekly chart. Last time it was on a 3-day. And this is on a higher time frame. So if we continue, Randy, where we just keep going on to all-time highs, I think it's going to truncate this. I don't think we're going to get up here to 65, 66 area. I think we'd go somewhere maybe 62-ish, maybe 63, and this would be just like that one. We go V-shaped recovery, we go make an all-time high, and then boom. Here comes Elizabeth. So I much prefer to see my correction first to then go breaking out, as opposed this thing keeps grinding. So I can't tell you this will not play out that way. I think the percentages are we're definitely going to get a correction. Is this the beginning of that and we're getting a little A, B, C? Or is this that last push in a 5 wave? And this is the last little thrust to then get the correction. But I don't want to see us breaking out into our all-time highs right now. I want to see the correction first. Amen? And that's where I think we're headed. So be careful on this. You think that all is rosy and everything's great. We're just going to keep going straight up vertically. Nope. We need that correction. And this would be coming back to the daily. You can see it a little bit easier. We're starting to get the correction finally resolving itself. ES did make a new high, high, low, higher high, right there. SPX, high, low, lower high so far. So this is likely, hint, 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 grind up a little bit more, probably toward this 6,000 range. Then we get that bigger correction. And either way I play it, if this is simply the A, and this is the B, we come back down in a C, or this is 1, 2, 3, 4, 5. Then we get the bigger A, B, C. Still think we're coming down here. In my humble opinion, all roads are leading to a bigger correction. So be extremely careful. And as a scalper, I think we're going to go up and touch this. I think we need this to resolve itself by matching what ES has already done. Right? We were up at a new high here, where SPX, the spot, was not. So typically they resolve themselves of their discrepancy before the next big move. And which direction is the big move going to be? Down. Right? So be careful. Also, looking at NASDAQ, it too is doing roughly the same. It made a high back in December, made a lower high, got the big pullback, and we're still, I told you the other day, likely we want to go test that lower trending line, lower high trend line. We did that. Well, could we go breaking out? Or maybe we come up and retest? I don't think we're ready to go breaking out to our 23, 24, 25, 26,000 right now. I'd much prefer to see that correction. So is this part of the same, that 1, 2, 3, 4, 5, and we're already doing an A, B, C type of correction? Or is this the 1, 2, 3, 4, 5 blowing off now, and then we get the bigger correction? So all I can say is, yes, I think this is going to go up a little bit more, but I also think it's coming right back down. And I'd love to see the NASDAQ come back to around that 18.5 area, would be kind of the sweet spot. So it's either we get that 2007 type of thing where we grind up to make all-time highs, then we get Elizabeth, I'm coming to join you, honey, sooner, or we get the bigger correction first to then get the blow off top, which would put us in the 24, 25, 26,000 range late year, maybe early next year, late this year. Then we get Elizabeth, I'm coming to join you, honey. Again, if we go all-time highs, then we're likely going to get Elizabeth, I'm coming to join you, honey, sooner than if we get the correction I'm looking for to then get the blow off top into the late year. Amen? Everybody good? What supports this? Well, look at our big, magnificent 7. Apple. This is setting up, and I showed you this the other day. This is setting up that much bigger move lower on this scenario. So I think after the push lower, the consolidation, we're due for another one of these, right? So we got the push lower right there. And all of this chopping overlapping, we really need one more push lower. Apple set up that way. Google, Mr. Alphabet is set up that way, right? Push lower, consolidation, correction, another thrust. Puts us down about 120 area. Wow, 120s. This would be part of that correction that we're looking for. And it could push us through into summer or even late summer, July, August, during that correction. And then from the end of summer into fall, into the year, we get that big blow off top. But even the Magnificent Seven are, technically speaking, looking for a thrust lower. So Apple, Google, NVIDIA, push lower, corrective action, kind of pushing it a little bit, but still likely going to get a push lower. Meta, same thing. Looking for another push lower. That's equal movement from that push correction to this rejection zone. Get a push down, equal measurement. That would push us somewhere in the fours. Maybe extends a little bit lower, but likely into this area. So be careful. When this correction unfolds, I think this is setting up all the chart. Only one that's not doing, even Tesla might have some exception with their robo-taxi coming out. Everyone understand that's supposed to be on the 12th. So we got what, 9 days before they make that announcement? They're going to be going in competition with rideshare, like Lyft, Ubers, etc., and they'll be driveless. So the plan is, if the technology plays out, Mr. Tucson, you think people are going to get into a rideshare that does not have a driver? Well, if it's 25 cents on the dollar, and you could be a much cheaper scenario than paying for an Uber and a Lyft, then yeah, I think people will adopt to that very quickly to save money. And if the technology is that sweet, it can replace your transportation in the cities and et cetera, trains and cars, et cetera. You have these carless or driverless robo taxis that pick you up and taking part of that big ride share. Uber, and there's a lot of money in Uber and Lyft, et cetera. So take all that money and boom, it just dominates the market. Although this might set up the same, it's not off the chart because Tesla looks similar to the other Magnificent Seven, that you got the big down move and then you got the correction. And if this technology doesn't fan out, then we could see Tesla come back down into the low hundreds, even push maybe back to near these lows again. So I won't say it's out of the question. So Tesla's either going to go ripping up or pulling way back, depending on this robo-taxi and what they're doing. But think about it. They can have millions of those cars available because with their software, every driverless car that they have right now, all their Tesla models, they can upload that in a matter of minutes, and then everybody has the same type of thing, and there are millions of cars on the markets that fast. So dominate that rideshare market very quickly. So I'm leaning more because I own my TSLL for this thing to go ripping much higher. And we may get the other markets to pull back, but Tesla still rips based on that. And already there are like so many cars in Austin, Texas, already on hitting the streets. They're robo taxis. So that big announcement's like 9 days. Let's see how that plays out. If the technology works and they just eat up the market from rideshare because it's so much less expensive. Once the rumor gets out, why use these rideshare when you could do this robo-taxi for a third or half the cost or more? That could really stimulate this to go ripping. So Tesla's either going about 700, 600 plus, or it's coming back down to the low 100 area. One of the two. I own shares of TSLL, so I can't tell you what to do. So what would happen if TSL and Tesla takes a big dive? I'll just load up on a lot more TSLL because in the long term, I do think Tesla's going breaking out. In the short term, I think this is going to stimulate a lot of interest for this thing to go popping anyway. That's the plan. But I'll tell you what I do based on what happened. But I won't, I'd be remiss again to tell you that this might happen. All of the big Meta 7 except Apple, except Microsoft. So back to that same scenario, Tesla's setting up for a big push lower, but with their big announcement, it could just reverse the path and go breaking out. This is what I think is going to happen more than this correction. And then you look at Microsoft. Microsoft already did that correction where you got the big thrust lower and the thrust lower. And now this is set to go breaking out to 480, maybe 500 zone. Now, admittedly, what if we get that correction and all the markets start correcting into next weeks or month or two, into late summer perhaps? Then we should probably come down to this zone to bounce and still get up here. But Microsoft has already made that corrective action, next leg down. They've already completed that. And they recovered to go breaking out. So of the Magnificent Seven, only the one, which is Microsoft, is destined to go seeking these extension targets, where everyone else is destined to get that big pullback. And when they get the big pullback, I expect Microsoft will come back into this low to high zone area to then bounce, where everybody gets the flush like Microsoft has already done, and then it recovers in the late year. All right. That's kind of the plan. What else do we have kind of sets the tone? Well, you come over here and look at your S5 FI and your heat map, and S&P S5 FI. Got to update that. Let me refresh the page. But it already touched. So this is a big oscillator. Right? Let me compress it so you can see. It's a big oscillator. And it's supposed to do exactly that. It goes from overbought to oversold, to overbought to oversold, to overbought to oversold. And if you compress this even further, you can see whenever we get up into the 80, 90 area, we typically go back down to 20 or lower, then back to 80, 90, back to 20 lower, back, just as an oscillator. And the last place we touched was up here, right? Didn't want to move my 90 there. Let me fix that. I always grab it when I don't want it. That's close enough. 90. Now let's see. Settings, go to my 90. But anytime you get to these extremes, you expect a reversal. So I don't trade this. It's just simply an oscillator. But last place we touched was up here. So we're more than likely going to go visiting down here. And this would fit nicely. We get our correction going down over the next few weeks to a month or so. And this baby comes back down to extremes. Then we get our blow off top going into end of the year, late summer, down here to end of the year, maybe early next year, we get a blow off top. I mean, it's possible this could dip and we get a higher high. Then we get the next correction down into summer. Then we go blasting off all-time highs into end of the year, late year type of thing. But this is kind of telling the signs We need more of a correction down more than we need to go exploding up. Amen? Same thing with NASDAQ. Again, I got to refresh these. Been a little bit since I looked at these with you. But the NASDAQ, how many companies of the NASDAQ are above their 500 50-day moving average? And the last place we touched was at extremes. So what's the likelihood we're going to go further down? Kind of sets the tone, right? We touched up here. Now that doesn't mean you can't touch up here. We get another little higher high. Then we come back down. But as an oscillator, it's spot on. Come up here, go there, back, 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 back. Got a slight higher high to a new low, so that can happen. So this could come down and get a slight higher high. But eventually, what happens after we got that pullback? Went straight back up. So what's the next logical place we're going to go to? Back down. And that could be that summertime correction followed by the fall blow off top going back up. Amen? So the barometers are set. Software is also needing that pullback. Let me jump in a few of these, show you the picture. Here is our S&P. Daily's in overbought territory. Weekly is in overbought territory. Monthly is in overbought territory. So I'm still looking for this to do another one of these where we turn over, get a weekly cycle down, then the monthly goes slingshotting back up. So I'd look for that correction to come in, then slingshot back up for that blow off top. Then we get Elizabeth, I'm coming to join you, honey, and we get that big monthly cycle down. Amen? So across the board, for the NASDAQ, same type of thing. Daily's been grinding higher as the weekly's been pushing, but the weekly's in overbought territory, so I'm looking for this little run to fizzle and we get a bigger correction where this turns over and my monthly's overbought. Again, it's been doing what it's supposed to. Slingshot, slingshot. So I do think we're going to slingshot again, but I think we're going to turn over to slingshot, and this will drift and turn over, and we'll get the correction followed by a blow off top, kind of what we're thinking. So be careful that these dailies are back in overbought territory, that this is either that AB coming down in C, or this is the end of that 5, and we get the correction down either way. Both signs and symptoms are telling you we're getting another correction. Amen? Any questions on that? So if you are taking bounces like on smaller time frames, and you say, well, I want to buy a smaller time frame like my 1 hour and I just want to scalp it up, something like that, and you're in the midst of this, of a little bit of a bounce, I'd definitely be in a position of authority because we're likely going to get that big sell-off. All right, so any questions? The Magnificent Seven, other than Microsoft, is setting up for those corrections, and Microsoft is likely to go up here, but we get the correction we're talking about, then we're likely going to see Microsoft pull back, but the targets are a high probability. 480, 500, I think we'll definitely get to there, might even push up toward 530s. But be careful, I think we're due for a correction before we get up there. And into summer, then rip up into the fall in the year. So be careful on these, look for those corrections to come. What about global liquidity in the Nikkei? Setting up for the same type of move. I think we're at least going to come down into the sweet spot area, if not a big push back down. And when that happens, we're likely going to see our markets pull back as well. All right, so from the low to the high, we're looking at this zone. I'm going to move that box for you. This zone to come down into this area. at least the 5678786 zone. Kind of overlaps with the prior low to high. We got a big rip during that dip. Now we're back same kind of zone. And I suspect when this happens, global liquidity pushes lower, our markets get the correction. Then we get a blow off top into late year, in the year type of thing, maybe early next year. Then we get Elizabeth, I'm coming to join you, honey. So all these markets are setting up the same way. So be extremely careful. For those of you that trade the Dow or the futures, we're still in the danger zone. We're nowhere near all-time highs. Still got a ways to go. So I'm looking for what? That correction to continue. Then we get the blow off top. Then we get Elizabeth, I'm coming to join you, honey. Amen? So be extremely careful on these little rallies. I don't see us breaking out all-time highs. And again, if that happens, then we're going to make less of a higher all-time high. And Elizabeth, I'm coming to join you, honey, happens sooner. Then we get the correction followed by late year into fall slash into year, blow off top, which again would put us somewhere in that 46 to 50,000. Then it's Elizabeth, I'm coming to join you, honey, going into next year. But be careful on this. Amen? So what happens when we blow up? Only one I don't see going on to make new all-time highs is the IWM or Russell. Look at the Russell. I think the blow off top is this area up here. And I think we're going to get a push lower, a push higher, into fall into the year. This would be the blow off top as opposed to all-time highs. And then we're going to get the big one back down. I'm looking to do a short spread. Short one out to September. When this pushes lower down, I'm going to close it. Then when it goes up, rallies into this zone, I'm going to do another one, pushing this thing to go down to 160, down to 120, fine-tuning 140 to 120. Or 1400 to 1200, but IWM is what I was referencing, that I'm looking for this to push down in towards September. And then we blow off top, which would put us into the danger zone, somewhere around 216 to 220 area, maybe 230. And then we look to go short again, and that's going to be the big one, where we go from this 2 plus down to 140, 120. But that technical picture on this goes back to years ago when we topped and reversed here. Let me stretch that out now, though, on the weekly. But we topped out a long time ago, way back in 21. And remember my statement back then. Before we go breaking all-time highs, we're going to break below this 1600 area, 160 area. Amen? And that's in the cards. So this is part of that scenario. Low, high, lower, low. And the only question is what I think is going to unfold. We're going to get a push lower into summer, maybe late summer. Then we're going to get a push into late fall, early into the year type of thing. Then we're going to get the big one. Elizabeth, I'm coming to join you. And we're talking from the 200s down to 140, 120 area. Big down move. So I do a put spread down into as far out as I can go once we're up here. Already got a put spread looking at this moving down into this corrective area. So when we get that push lower, I'll take my profits, then look for this to rally, set it up again, rinse and repeat. Amen. So be careful with this little run. Going back to the daily, it's just kind of grinding in this zone, but that is clearly setting up this bigger move lower. Amen. Any questions on that? Then we pop and set another one up for the bigger one to go below 160 down in that 140, 120 zone. All right. Let's continue. What about gold? Still think gold, be careful with gold. It's going to bid the bigger correction. It is screaming. This bigger correction is still unfolding. So far, so good. The other week, we said it would go down to 31.50, then bounce to 33.50. It's in that zone, so we're looking for the next push lower. And be careful. This might kind of maybe even dip up one more time, but I do think we're going to see a big 5-wave down coming. So Randy, this looks like a 3-wave into a A. We're keeping score on what that is. This is the A. And we got this 3-wave, so we got a 3-3-5 coming. This is the B wave. And then we're going to get the 5-wave down in the C wave, which is going to bring us somewhere toward the Magic Fibo slash 2800 zone would be ideal. Where does that come from? Well, you use your 3-point tool, and from the all-time high to that recent correction low to the current run where we are, it puts us right around our extension slash maybe down to this 1618 area. So be careful on gold. Could this thing break out and keep going? Yes, but the technical picture says that's extremely low probability, and this bigger move lower is a much higher probability. And this definitely looks like a 3A, 3B, 5C. Amen? And what happens when gold makes this correction? Well, you can see it's been following my lines to the T. So far, so good. So it's hard to say. There's many types of correction. Was it going to be, I couldn't tell you from day one when this correction, I just said, we're going to come back down to Magic Fibo, and it should be ultimately in a 3-wave move. But what's it going to be? Well, based on the recent price action, looks like it's a 3-3-5 type of correction. So let's see how that plays out. Amen? And what I'm looking for here, whenever this finally tops out, starts to give us a thrust lower, I want to see roughly a 618 retracement of that move, kind of like we're doing now. From the high to the low, we're testing that 618 retracement level on a bigger scale. But this starting of the 5-wave down, I kind of want to see the same thing. When this starts, see about a 618 retracement, followed by the big thrust in wave 3, another 4 correction that doesn't go into the area of wave 1, and then we get the last thrush somewhere down to Magic Fibo slash maybe 2800-ish is what we're thinking. Amen? Everybody good? So there you have it. Be careful. I know we got a reversal. Let me zoom that in so you can see that candle. I know we got a little reversal there. Right? Yesterday? Ooh. Don't fall for it. We're going down. And this could be the beginning of that last little thrust. And we start a 5-waver coming down. So in my humble opinion, gold's going to continue with another lower high, lower low before we go breaking out to new highs again. Fair enough? And silver. This is going to be a fake breakout on silver, so be careful on that one. And it looks like it wants to go breaking out. Woohoo! This thing's going to the moon, Alice. It's headed to $60, $70 like I promised. Nope. I think this is part of that bigger correction, and we're going to get one more thrust lower. When gold thrusts down, silver's going to thrust down, and I still have junk bids down here at 25 and lower. Yes, I own it, shooting for 60 to 70, but I don't think this is it where we're just going to keep going straight up. I think you're going to see this baby correct, pushing this down about 25 or lower. And when my bids get filled at 25 and lower, I'm holding those shares until we get to $60 to $70. Amen? Any questions? So if you're a short-term scalper on silver and you like the pop so far, you're thinking this is the beginning of a big, massive breakout, I think you're due for a little bit of shock and awe that I think this is going to end up with a correction back down. Then we get the bigger pop. So if you're scalping this, I'd be definitely taking profits and be in a position of authority, because when gold makes a correction down to 2800 zone, this baby should thrust down below this prior swing point low and make a new low somewhere in that $25 range. 25 and lower is salivate country to buy more shares and shoot up for our big time target 60 to 70. And that comes from a higher time frame, from this prior move. We got $60 to $70. We're going. But I don't think this breakout is the one. I think we're going to correct down to below 25. Then we're going to go up here. So I will make the statement, my humble opinion, we're definitely going to get up here. No ifs, no buts, no ands, no exceptions. Silver's going here, period. And could be the beginning of a lot higher, but period, we're going there. So the only idea is this little breakout, which appears to be breaking out again. Woo! Is this baby ready to go up here? I don't think so. I think it's going to get the correction back down 25 and lower. Then we're going to start ripping higher. So be careful with your silver. All I can say is, Harold, I definitely have more junk bids down here telling the broker, hey, go till cancel orders. I want to buy shares of SLV. When they get to 25 and lower, the lower it goes, the more I keep adding. And how long do I hold it? Year or two, whatever, till it gets up here. We're definitely going there. But don't fall for what we see right now, because I do think gold's going to make that bigger correction and silver's going to follow suit. And we're going to get this little, what appears to be a breakout, is going to fizzle and come back down. So this looks like a expanded flat correction. This is A, little three wave up in B. Let me mark those. This is a B. This is the A. And we're going to come back down to below the low and make a C, which is, we're talking 25 or lower, to set the tone for us to go skyrocketing in 2026, etc., to our target of 60 to 70. Amen? So again, you got to compress this to go over there to get that in the picture, but you get the point. This is a given. Absolute given. So be careful. Once again, for those kind of checking out gold, I do think gold is coming back down, and I'll go back to the daily. We're going to make a move that this is going to get rejected. We're going to come down to 5 waiver. It's a 3, 3, 5, A, B, C correction, and then great opportunity to add to your position, and then a reversal. All right. So when gold does this, silver's going to follow suit. So this breakout is going to be a head fake. Come on down. You're the next contestant on The Price is Right. And then we're going to get The Price is Right down here at that 25 and lower, and boom. Well, I'm already in this to go to 60, 70, but I want to add to my position at this 25 and lower. Any questions? Checking out a couple of other that I'm very interested in. We talked about Tesla briefly with the cybercabs. They're going to be rolling that out, and the official announcement is supposed to be in the next 9 days. I think this could blast off our TSLL. It's either going to push Tesla to 700, or if it's a flop and it doesn't work out, then it might push Tesla lower. But either way, kind of like we talked about, adding to position down here, we like almost tripled our investment off of that low. If we do get the push lower into late summer, that just means I'm adding more, because as Tesla goes breaking out and the NASDAQ and everybody goes blow off top into the fall, late year, these babies are going to go soaring. Tesla could be the kind of outlier where their announcement pushes Tesla higher, but our markets give us that correction we're looking for. Then late summer, we start blowing off tops and we start ripping into the end of the year, blow off highs. I think this TSLL has still got a lot left in this package to go much higher. And within the NinjaTrader 8, as you well know, Harold, we have under drawing tools, part of the software, the MPA Fibonacci retracements, MPA extensions. So this is what this is on here, giving us our extensions that we follow and the rules we use is all built into the software. Amen? So any questions on that? I think we're going much higher, much higher. Weekly still going to continue to cycle. Engage, disengage, and we're going to grind and work our way up, but we got a much longer way to go, and the monthly's just getting started. Monthly starting to turn and hook. Don't have a whole lot of data on this. I guess that's just as much data as we have on this TSLL, because it's a new entity. All right, so anyway, you're looking at the monthlies just getting started. It's going to do this in the coming months, in my humble opinion. So I'm going to draw the software for you. This baby, as we go in toward the end of the year, is going to start turning upwards like it did there back in October when we got the big surge we talked about. And we're getting this little pullback now, and we're about to reverse. So we're already seeing the hook. We're just about to get the cross. What does that mean on the PAI hooking across? The weekly is going to cycle, and we got a long way to go. Money flow is just getting started toward the upside. Trend momentums are just getting started. So in the coming months, expect that to do that, way up in price, and the software continue to cycle. Amen? All righty. And the other one on the radar we've been talking about is Coinbase and CONL. CONL is to Coinbase as TSLL is to Tesla. So I suspect we got a lot more upside left on this guy as well. And Coinbase, I think we're going to go breaking out to all-time highs. And that's going to occur when? Be careful. I think we're going to get another correction on Bitcoin. I'm not convinced Bitcoin's pullback is over and we're ready to go blasting off to that 150, 175 target. But I do think this could be 5-wave up, little 3A, B, C correction, and then we go blasting off. But I do think we're going to go into the 400, maybe 500 zone before we're done. And I'm not convinced that this correction is over just yet. Fair enough. So that ties in with Bitcoin. And Bitcoin, right here, Mr. Tucson, it could be over. We got a little 3-wave correction, and we came back to the support zone we were looking to hold, and it's bouncing. This might be the breakout, but again, I would much prefer to see a bigger correction to then set up the big blow off top, which our target for Bitcoin is at 150 to 175 area. Amen? So maybe this correction was enough. Remember last week, kind of talked about that? And I said, expect Bitcoin to continuous retracement last week. It certainly went down a few days and a little lower, then it's starting to reverse. But I'm not convinced that that is the end. And caution on the markets. We're stuck between support and resistance. That hasn't changed. Still think that pullback is developing. We've been discussing. And even as Bitcoin was pulling out the all-time highs again, what did I say? Be careful. Pull back soon. And it started the next day. That was pretty good. Pretty good. And when we were talking about our TSLL trade, not only we're in, but the last time was in October. What did we mention in October when we were there? Right here in October of last year, that week, expect Tesla to hit 500, consider the TSL trade. And you would have got in around $9 and it went up to $41. So we set it again. TSLL is setting up, and we talked about as it went below 15 was the buy zone right there. TSL reached our buy zone, and then as it went lower, so keep adding, the lower it goes. Consider the CON trade. We're expecting this to hit 400 and above. So this baby would go rocketing. So we talked about that months ago. And look at the charts. They're definitely setting up for that much bigger move. Amen? So be careful on this one. I do think we're going to get another leg down, and then we're going to go popping for its Coinbase, because when Bitcoin pulls back, it kind of pulls the market back. So I'm not convinced Bitcoin's ready to go breaking out. We're probably, if you stretch this out, we're getting somewhere in a 618 retracement. So you go back to your drawing tools and you go to Fibonacci retracements, and you got from that high to this low. I wouldn't be surprised to see us go up into the zone and get rejected, and then the same with Bitcoin, right? So we're just kind of getting into that zone, lower high, lower low, and Bitcoin should do the same. So I'll come back over here, back to Bitcoin, and same type of move from the recent high to low off of this stretch. We're going to maybe test that 618 zone and then get rejected to come back down, maybe a little bit higher. I'm really not looking for this to go breaking out just yet. I'd like to see this bigger correction, right, Randy? Bigger correction. So this little A, B, C is your A. This is the A. And this will be the B. And then the C. And we come further down. Would be ideal. Then I'd actually love for this. What I told you was Bitcoin is going to correct either to here to go breaking out or come down here. I still think I'd like to see this better. We get a bigger correction, then it sets for the big blow off top. And that would push us toward that 150, 175. I could be wrong where this just keeps grinding higher. But again, I want to see that bigger correction because it's overdue. So those of you that are scalpers in the Bitcoin arena and like to get in, get out, I'd be in a position of authority, not expecting this to go to 150, 175 right now, that we need that bigger correction. But it's possible. I will give you that. It did what I asked it to do, come back and at least retest the breakout zone that we were in before. We broke out, we retested it, we're bouncing, but I think we got another leg down. So that's the A, the B, and the C. Then we get extremely bullish again. And again, I'm expecting Bitcoin to top out by the end of the year, probably September, October, late fall or fall-ish. And that's typically what has always happened. For those of you that don't know much about this arena, we have on the charts, like clockwork, Every 4 years, this blue line represents Bitcoin halving. In 16, 20, 24 most recently, again in 28, and before that was in 12. So 12, 16, 20, 24. We have 4 halvings thus far. Every halving, we get a 12 to 18 month run post halving. Every post halving, 12 to 18 month run. Every post halving, 12 to 18 month run. Every post halving, 12 to 18 month run. Also, notice the timing on these. We topped out in 13. We topped out in 17. We topped out in 21. We're going, hint, 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 we're going to top out in 2025. Hint, got it? We get a crypto winter low in 14, 18, 22. When are we going to bottom out in crypto winter low? In 2026, late 26. So we know the ebb and flow of this market based around halvings and 2 other things. From every crypto winter low, Bitcoin has at least done a 10x to 20x. 10x to 20x, 10x to 20x. So this most recent low was our 15,000 and change. The most recent low is this 15,000 and change. So where does my 150 target come from? 10x of 15 puts us in 150 and change. What is the other? The other is from the swing point high to low, we always seem to achieve at least a 1618 retracement. So this last time we had the high to the low, we went right to the 1618, kind of topped out right around that 157-ish, went up a little bit higher, but right in that zone. Time before that, we got the high to the low. We ended up going to 272. High to low, we went up to the 272. So a couple of times 272, the other time, so this is why we're saying at least a 1618. From that high to that low went to 1618. And this next time around, which is the one we're in, where's my 1618? 175. See it right there? Got a lot of lines and numbers on there, but there it is right there, 175. So from the crypto winter low, 10x from 15 puts us 150. From the high to the low, Fibonacci style extensions puts us at the 1618, right around 175. Thusly, my target was 150, 175 a long time ago. So, what do we know? We know we top out every 4 years, 13, 17, 21, 25, hint, hint. And then we know we bottom out every 4th year at the 14, the 18, the 22, and we're going to bottom out again in 26. So let's stretch this view, go back to the daily, and what does it tell us, Harold? It tells us we want to be buying Bitcoin in 2026 when we get down to this buy zone. Actually, I got to go to a 3-day, and I think you can see it right down here. And we're already kind of telling you, we're going to go up to 150, 175 or higher when we're done. Then we're going to have the crypto winter low going into late 2026. And the anticipated move, provided we make this move to 150, 175, which is highest probability, that we get a typical correction back down of Bitcoin, would put us somewhere between that 50,000 and 30,000. Well, remember, when Bitcoin in 2022 down here was below 20,000, I kept telling everyone, Bitcoin below 20,000 is a crime to be able to buy at that low. It is a steal of a deal. So in 26, Mr. Tucson, when Bitcoin is down here, I'm going to lead you in the same I did here in 2026 once it's done. And when we're in that 50,000 or lower, that is the time to start nibble zone, and start adding to your position of Bitcoin. And you're going to hold it from 26 into 2029. Why 29? Because we have a halving in 2028, and 12 to 18 months post halving puts us in late fall of 2029. We top out in 13, 17, 21, 25, 29, and then we'll do rinse and repeat from 2029. We'll go into the 14, 18, 22, 26, and we'll look for the bottom to come in 2030s. So I already got this plotted out for you into the 2030s. We're going to buy in the nibble zone in the 2030 area, and then we're going to look for halving in 32, and we're going to sell in fall of 33. Got it? Rinse and repeat. So, zooming in on current price action, be careful. I do think another one is coming for a correction, and I think the correction we're currently in is not over. So my anticipated move is we still got another push lower. Amen. I may be wrong, and this could go breaking out, but I don't think so. I think technically after that latest run, it was consolidate, run, and another one back here, consolidate, run, that we're due for the bigger correction. Amen. We consolidated here, we popped, consolidated, popped, consolidated, popped. And yes, this could be looked at, Rand. That looks like a 1, 2, 3, and that could be over. That was the plan I said in advance. We're either going to come here, bounce and go breaking out, or we're going to get a bigger correction. I still think we get the bigger correction I would prefer, and that would set the tone. Plus, there's a lot of rumor out there that some of these big players are going to continue to push Bitcoin lower. So a lot of the retail want to get out of Bitcoin, sell their coin, so then they can acquire those at a lower price to then set the tone for the big splurge to the upside. I still think, without a doubt, Bitcoin's going to go to that 150, 175 target. Rinse and repeat. When should it be there by? September, October, late fall this year into the fall. So should we get the correction, which I think will continue, and the markets give the correction into maybe June-ish, July, we're in June now, push us into July or even August, then the last several months, September, October, etc., the next 2-3 months, this thing is going to go vertical to the moon, Alice. So the lower we correct, the more we're going to go and rip to that 150, 175. And my plan is I'm going to unload all of my, it depends on what kind of account you have, but a lot of my Bitcoin based, like Mara, miners, etc., these up in this area, I'm going to unload those. When Bitcoin reaches that 150, 175, I'm going to unload all of these. Then I'm going to look to buy those and some others when we get to late 2026, as Bitcoin gives us the next big pullback. No reason to hold these when Bitcoin tops out at all-time highs and we're ready to get that big correction. You would want to hold these into that period. At least that's what I'm doing. I'm going to sell it, take all my profits, and put my profits on the side and use it when we get the big 2026 pullback. Then I'll look to reload, rinse, and repeat. Amen? Whether I buy Bitcoin straight out or some of the BitTos and some of the others, or iBits, the ETFs, etc., but you get the point. So be careful on these bounces, both Bitcoin and the markets. Be careful. I think we got another push lower. Then in late summer, well, we're just into June now, but toward July-ish or even August, then we look for a huge September, October, November type of thing where we go ripping higher. Amen? So be careful. This could be the end, that it just corrects to this little three-wave move and it's over. But I'm leaning more towards deeper, and it fits the mold where people are going to want to what? Let's get people discouraged with Bitcoin. I thought it was going to 150, 175. The naysayers come out of the woodwork. It's trash. It's rigged. And when it's down here, Randy, you rinse and repeat, reload, and that baby goes exploding into the fall. All right? Otherwise, this could possibly go breaking out. I told you when to buy way back, and again, I can't tell you what to do, but way back when we were down here at 15,000, I said below 20 is a steal. Even when we got to 25, 30,000 range, I said this is still a steal of a deal. Well, your next zone in late 2026 is going to be your buy zone, nibble zone, and then we're going to look to do the same. And then we'll run at that point, right, Mr. Tucson, others, Harold, we'll have a high, and then we'll have our nibble zone low, and then we can run the Fibonacci's and figure out where's the next target. How low do we go? Do we do another 10x? So what if we go toward 30? That should be 300,000. If we go to 40, that should be maybe 400,000. We shall see. But so far, every one of these crypto winter lows to crypto winter highs, Bitcoin has done at least a 10x, and that's from 2012 to 16 to 20. Now into 24, we didn't quite reach the 10x yet, but I don't think we're finished. So as long as we get to 150,000 range, then we have accomplished that again. I do believe we're definitely going to do it. So we should see in 26, we get that new crypto winter low. By late fall of 2029, we should be at a 10x, whatever that low is. That's the plan anyway. But isn't it interesting where you can just analyze this and go back off the history and know when I should be buying and when I should be selling? And the chart screams it, right? It absolutely screams it. And again, just to reiterate, in 13, over here, we were topping in 17, 21, 25. Go back further, which on this chart I can't. I'll go back to the weekly, but I just showed you. In 13, we topped, 17, we topped, 21, we topped. We're going to top in 25. You get your crypto winter low before the next halving, and you bottom in 14, 18, 22, and when are we going to bottom again? In 26. Beautiful. And then the next halving's in 28. Rinse and repeat. So any questions on that? But boy, was that some big time scenario. Recircle the wagons. Be careful. Elizabeth, I'm coming to join you, honey. Harold is coming. No ifs, no buts, no ands. It's coming. I do think we're going to get a bigger correction to start. I don't think it's over yet. So this bit of a rally, I think we need a correction before the blow off top. Amen? Then, as we get that correction down to 5,400 zone, 5,300, then we can look for this thing to go ripping into the mid 6,600 range. But I still think into June, July-ish, probably over the next few weeks, we should get that correction. Amen? And if we look at the daily and zoom in on this, I don't think this recent correction is it. Right? This recent correction. So I said earlier, we're going to go test the 6,000 range more than likely, and then we're going to get another pullback. All right, that's the plan. Whether this is a 1, 2, 3, 4, 5, right there, 1, 2, 3, 4, 5, and then we start the three-wave correction, or this was already the 1, 2, 3, 4, 5, and this part of the A, the B, and the C. But Randy and others, it spells we're going down. Even if that is the 1, 2, 3, 4, 5, then we still got the correction coming. Either way, we got a correction coming, hint, 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 correction coming, hint, 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 correction coming. So the last and least likely is this just to keep going up to all-time highs. Then it's like the 2007 scenario where we get Elizabeth, I'm coming to join you, honey, happens sooner if that happens. So be aggressive on your profit taking. I do think this can go up a few more points. And then look for this to potentially reverse and a correction. Or best case scenario, this is the 5 waves up. Then we start another 3-wave correction down. That's why I keep saying this should go out into summer. So July-ish before we then go ripping into blow off top into the end of the year, late fall. And the reason I think we're going to go a little bit higher is because this SPX needs to resolve this ES matter where we went to a new high here on ES, but the spot SPX we did not. That's why it makes sense for this to blow off a little bit more to resolve the discrepancy between the futures and the spot market. And then we look for that bigger decline. So again, whether that's the A, the B, and the C we decline, or that's the 1, 2, 3, 4, 5, and then we get the 3-wave correction, all roads are leading toward that. Only a very small, very low probability do we just keep grinding higher and higher to all-time highs. And I warn you, if that is the route it takes, which is a very low probability, then boom, we're going to get the Elizabeth, I'm coming to join you, honey, much sooner than later. And remember my big, I don't do predictions. Everybody predicts everything. I'm not a prophet, even though sometimes you may think I am. I'm not the prophet, right, James? I am simply make statements. And I said this big announcement all year long and saying it even last year. Before we break 7, we're going to break 4 on this S&P 500. Before we break 7,000, we're going to break 4,000. And that's where the Elizabeth, I'm coming to join you, honey, comes into play. So whether we grind up very low probability to all-time highs and Elizabeth, I'm coming to join you, or we get the correction we're talking about into that 54 to 5,300 kind of sweet spot to then do the late fall into the year breakout, still should be below 7 and end up below 4, right? Before you break 7, we're going to break 4. Amen? All right. And last but not least, NASDAQ's doing the same. Be careful with this one. I think we got a correction coming. Love to see this come down to somewhere around 19 to 18.5, kind of sweet spot around that 18.5-ish area. So bigger correction. Is this the 1, 2, 3, 4, 5? Then we get the 3. Or is this already the 1, 2, 3, 4, 5? And that's part of an A, B, C correction. Either way, Randy, looking for a correction to come back down, so be careful. And then we should get the blow off top going into late fall, into the year type of thing. And what is blow off tops? ES is up here at that 64 to 6,600, kind of fine tuning around 65, 66. NASDAQ, fine tuning somewhere between 23 and 26, more likely the 25, 26 zone. And then the only one that's not a true breakout would be the Russell. I think this baby's going to fizzle, give us a push lower during the correction, then a blow off top into the zone. And then I'm looking from this 220, and this is IW, well, Russell would be up here, that 2300 area, to then short it down below 1600. On IWM, looking for a correction to come in, then we go blowing off into the fall, into the year, into the danger zone, somewhere around that 216, 230 area, and then we're going to look to short that into Elizabeth, I'm coming to join you, honey. And that would push us down below 160, which is this big bounce zone. And we're targeting 140 to 120 area. What a move from potentially 230 down to 130. Big move. Big move. But that's the plan. So down, up, and when we get anywhere in this 216 to 230 range, I got alarm set to tell me I'm buying a put spread, going out as far as I can go, and shooting for 140, 120 area. That's the plan. And currently, I think we're going to get a push down into this zone, and I'm looking for this to take place no later than September. So I got a little put spread out to September for this to give us that little push down. Before then, we get the end of the year rally that pushes us back up in here. Some put spread down, take profits when it goes back up here, set up a new one, long term, pushing out as far as I can go, and I'm going to shoot for that 140, 120 target. Amen? That's the plan. Put spread down, take profits, rally up, get another put spread, pushing it out to probably into 2027 type scenario as far out as I can go. And that's going to be the big move from 2 plus down to 140 and lower. How cool is that? I got the plan already. Dow Jones, same type of thing. I think we're going to get a correction again from the low to the high, a little deeper correction before we go blowing off top. Blow off top for the Dow should be somewhere around 45 to 50,000 range. So we're looking for this to give us that correction. Then we get blow off top. And then we go, Elizabeth, I'm coming to join you. Amen? And last but not least is the Nikkei, kind of the global liquidity. In it too, I'm looking for this arrow, a little push lower, then the big rip, and then the big one. So into summer, we should get the pullback. Into late fall, toward the end of the year-ish, we should get the blow off top. And where's the blow off top for the Nikkei? Somewhere between 44 and 50, kind of similar to the Dow, 45 and 50, 44 and 50, somewhere in that zone. And then we get the big one. First things first, retracement into the fall, into the year-ish, then the big one. All right, so be careful. And with that, remember TSLL. I do think this baby's going ripping much higher. Targets up here, 40, 60 range is kind of what I'm thinking. Just like in October when I brought that up, boom, perfect scenario. Now, we actually went a little deeper than expected, but I kind of told you, $15 and lower you should buy. As it moves lower than that, add more, add more. So when it got down to the $6 range, I was like, thank you. Oh, that was a gift. So I expect this to go way up here. And yes, even with the pullback we're talking about, maybe we get a dip. If this thing goes anywhere near these lows, Harold, or lower, I'm just adding that many more shares for this baby to go reversing by year end, and we get up here. We probably won't be lucky enough to get price to come way down in that $6 range again. Probably won't see it. But I had no harm in foul to have some junk bids down here, setting up to add more to my position. And then boom. But the plan is to go stratosphere, just like we did last October, and it did exactly that. Plus Tesla's coming out next 9 days with their robo-taxis. They're going to be dominating the Lyft market, if you will, the rideshare market, and could totally turn into doing even all city public transit scenarios if it works out. Wave of the future, but that should give us that push. Amen? Otherwise, if it does give us the bigger pullback, then I'll look to add shares because there's no expiration on these shares. I can hold them until whenever. and I'm looking for this to go much higher in the weeks and months as we push toward the end of the year. So with that, remember, always reference your software. I expect this correction to come in these markets because our dailies, lower time frames, higher time frames, 1 hour is back and overbought. 4 hours back and almost overbought. That's why I think we're still going to go up a little bit more. Dailies back and overbought. Weekly's back and overbought. So that's why I think we're going to get the correction into next few weeks, maybe into the July-ish type of thing. And the weekly will turn over, the daily will cycle down, and then we'll get what? The summer into late fall into the year, where this monthly continues this scenario where we just turn over slingshot, turn over slingshot, turn over slingshot, and we're going to go to all-time highs into late summer, by late summer into fall, into the year type of thing. We'll end up just pushing higher, and all-time new highs. All right. So take care. God bless you. We love and appreciate you. And as I like to close, that's it and that's all. We'll see you tomorrow.